You're already a successful farmer, but what if you could dig a little deeper? To take in a wealth of knowledge on topics like farm profitability, grain marketing, leadership skills, and more. Build your knowledge, strengthen your foundation, and move from experienced to expert. Welcome to GrowU.
So there are challenges really out of the farm's control, and weather's always a big factor, and we have a weather factor here today. It started raining, and you can hear the rain on the roof. So if you hear a little rain today, we're happy it's here. Hi, I'm Dianne Shoemaker, Field Specialist for Dairy Production Economics from The Ohio State University, and I'm really happy to be here today talking to you about farm profitability on this very rainy day here in Columbus. So why are we talking about farm profitability? Numbers are really cool and exciting, and this is what I find fascinating about working with farmers is there is such a range in how each farm performs. And one of the ways we look at that is net farm income, total net farm income from the farm business. And that has a huge range from positive to negative every year, even within the same group of farms. We can't always identify what makes one farm that much better than the other, but there's a group of farms there that have fun farming, and it's that top third. If you are serious about farming and farming into the future and being able to make changes and improvements and bring family into your farm business, you need to aim today to be in that top third of farms and to stay in that top third. So how do we approach determining whether you are in the top third or if you're not in the top third, getting there? There's several things that we're going to focus on today. The first is somebody has to have the responsibility to collect the numbers that we're going to use and follow through with getting those numbers used. We also have to generate, keep track of, record, work with numbers. How is that going to happen? And the third thing is we have to use them. So how are we going to use those numbers and determine those things that we need, generate those numbers that we need to see where our business has been, where it is, and plan for where it's going to go. So let's talk about the first item. Who's going to do the collection of numbers for your farm business? So sometimes we think of that as the bookkeeper, but it's really more than a bookkeeper. We don't want someone who's just going to plop a number in a book. The more they enjoy it, they're passionate about it, we're going to get better information. So you, as the farm owner and manager, can do that if that's interesting for you. Some people don't like numbers. Me, I think they're fabulous. And you need to think they're fabulous if you're going to spend the kind of time. So we need to identify that person, and we really need to acknowledge that it is a responsibility and give them the responsibility and the authority and the tools to do that, and time is an important factor there. It's going to take time to do this, and it needs to be recognized that that time has to be dedicated for the task. The second thing we really need to make a plan for is how we're going to collect the numbers. First, we've got the person whose responsibility it is. They need the tools. So keep it simple, and it doesn't have to cost a lot. Especially when you're starting out, starting with a very basic bookkeeping program, setting up a good chart of accounts that's going to capture the information that you need to do not just whole farm analysis, but also your individual enterprises. What is it costing you to grow an acre of soybeans? What is it costing you to grow an acre of corn if you're doing a rotation? If you have a livestock enterprise, in addition to your crops, Is it making you money or not? You need to set up your bookkeeping program to capture the detail you need, but you don't want to collect information that you're not going to use. Keep it manageable. There are many programs out there that you could spend thousands of dollars on that will keep all kinds of information. That's not where you want to start. Keep it simple and only buy up as you need that information and have the ability to collect the data and then use it. I would really like to see folks invest a little in a basic program that's going to give them the information they need. You don't need to spend thousands of dollars a year on some big program that keeps every record of every little thing that happens on the farm. It's going to be cumbersome. It's going to take a lot of time to learn how to use it, and you may not need that information yet. So especially for beginning farmers, and this could be an established farm, but it's bringing in a next generation. They need to start keeping their records too. So basic programs, try to avoid doing everything on a spreadsheet, because ultimately that doesn't give you the ability to really dig into the numbers and do multiple year comparisons as easily as a good basic software program does. So the third area we want to talk about today is how you use the information you've collected from the person whose responsibility it was to do this job, and how do we put it into a format that we can use to look at how the business performed this year. We can look at it historically and see how we compare to previous years, and then we can also have that information in a format that we can use to plan ahead. So there's 4 major financial statements, but we're going to focus on 3 today. The first is the balance sheet, and that balance sheet I like to think of as a snapshot. It's a snapshot of our farm business on a day in time. Now, typically we're looking at January 1 or December 31st. People have their personal preference on which date they want to use. It doesn't matter. Just be consistent from year to year. And on that day, we're going to go out and take inventories of what we own. We're also going to capture what we owe other people. So that balance sheet is called that because on one side we have the assets, all of the items that we use in our farm business to generate the soybeans that we sell, any other products that we sell. And the liabilities are the dollars that we owe other people. And that can just be, I have to pay the electric bill for January, and that actually was December's electricity, so that's an accounts payable. I might have line of credit balances. I might have loans for machinery and equipment or for land purchases. We're going to capture all of those on the liability side of the balance sheet. And then ideally, we have fewer liabilities than we have dollars of assets. And the difference between those is our net worth, or the equity that we have built in the business. If we have a profitable business, that net worth should be bigger at the end of the year than it was at the beginning of the year, if we've retained some of those earnings in the business. So those balance sheets are really the bookends of your business year. And so now we have to look at, where did money come from during the year and where did it go? So we're going to look at 2 statements to do that job. The profit and loss or income statement is going to describe all the dollars, all the income that was generated by the business as they sold crops, livestock, whatever the business's enterprises are. And then the expenses we're going to include on the income statement are going to be the expenses that were generated in the process of growing those farm crops. So when we look at the income statement, we're looking at cash income, cash expense, but the cash doesn't tell us the whole story. We need to take 2 more steps. And the second step is, how did our inventories change from the beginning to the end of the year? That's another job that our balance sheet does for us. We can look at, do we have more grain in storage at the end of the year than the beginning of the year? That's income to the business, but it didn't show up on our income statement yet on a cash basis. So how did our inventories change? Makes our first adjustment. Did I prepay expenses for the next year? Did I have prepaids for this year? Those are tax management strategies, but if we just look at cash, we're not going to have the picture of what were the total expenses or the total income I had for that production year. So I'm going to capture that on the income statement. And then finally, we're going to make a charge for the use of our machinery and our equipment and our buildings for the year. And that's economic depreciation, but that bottom line, that net farm income, tells us on an accrual adjusted basis, how did our farm perform during that year? And then the final document we want to look at is the cash flow statement. So it's going to show us where the dollars came from that entered the business and where they went. So the first step of that cash flow statement is our net cash farm income. But then we're going to look at where other dollars might have come into the farm business. And they can come from a number of ways. They're coming in from our sale of soybeans. But I might also have borrowed money, and that is cash coming into the business. I can also have sold a tractor or traded a tractor. That generated cash that flowed into my business, and those things aren't shown on the income statement. Now, the final thing we're going to see on our cash flow statement is where did money go? So it certainly went to pay expenses, but if I bought a new tillage tool, cash went out of the business. That doesn't show up on our income statement. I paid taxes. That doesn't show up on our income statement. It does on our cash flow. Family living draw shows up on the cash flow. So that cash flow tells a different story than what we see on the income statement, but it's also an important story. Where did cash come from? Where did it go? And long term, we want the bulk of the cash generated to come from operations. And so that's something that we'll monitor over time. We need these good numbers that are collected accurately and religiously to inform these financial statements, and then you have the tools to see, how did I do this year? Am I growing? And how do I stay in the top third if I'm already there? So we were just talking about generating your balance sheet, your income statement, and your cash flow statement. Some people are going to be very comfortable generating those. Others might not know where to start or really not feel comfortable generating those. So how do you get that done? You can work with an accountant and make sure you then spend time looking at those and proofing those documents before you use them for decision making, or you can engage in a program that can help you do that. I work with the Ohio Farm Business Analysis Program, and that's what we do. We take the records from farm businesses in whatever format that they collect those. Doesn't matter whether it's paper-based or a software program, and we generate those statements. We have beginning and end of the year balance sheets, the income statement, the cash flow statement, and also then that statement of net worth. The real benefit of being involved in that program is you get information on how you did this year. You also get historic information. I have farms that have been doing analysis for 12 years. So not only do they see how did I perform this year, they get the historic information laid out every year. How have they progressed over time? Powerful tool to look at, am I meeting the goals? Am I generating enough money? And am I able to reinvest in the business, have cash available? Am I in the top third or not? You're going to know. Now, interestingly, as we work with farms who choose to do the whole farm analysis, when we go over that, they're asking, well, how do I get better? How do I fix this? And almost always we have to say, if you really want to answer those questions, you have to take the final step of not just analyzing your whole farm business, but also analyzing individual enterprises. So what's your cost of production your net return per acre for your soybean enterprise. What's that net return for your corn enterprise? If you have livestock, is it generating positive returns, or is it one of the things that's holding you back? And you don't know that for sure unless you do that enterprise analysis, not just on the cash basis, but looking at the whole accrual adjusted net income for the year. When you do that, then you have the information that you need to make really critical decisions for your farm business. Now, that tells you where you are compared to yourself. What we also are able to do is collect the information from all of the other farms that participate, so you will get benchmark reports. And the benchmark reports come for the whole farm, so you can look at the 21 financial standards measures and see where you compare on those, but also for your soybean enterprise. How do I compare on income items, on expense items, on that bottom line with my peer farmers across the state? Am I in the top third? Am I close? Or do I have a lot of work to do? But those benchmark reports really help you identify strengths of your farm business and opportunities to improve in that farm business, and gives you the numbers that you can use as you set goals. How do you measure and monitor progress? On financial goals, those statements are your tool as you work towards being in that top third. So we've been talking about farm profitability. So how do you claim and retain a foothold in that top third? Because you want to have fun farming, and you can have fun farming, but it takes some work. You need to make sure someone has the responsibility and the tools to do a good job of collecting farm business records. You also need good production records, and to do it well, you're going to integrate the information that you get from both the financial side of your business and the production side, and that is what's going to help propel you and keep you in that top third. You need the person, you need the tools, a good bookkeeping system, you need to generate farm financial statements every year, and you need to use those to improve your farm business, whether you do that independently or whether you do that as part of a group project. But it is within everyone's grasp to be able to do this. I didn't say that you have to keep the records. You have to make sure the records happen. You do need to be involved in using those records to manage your farm business, because if you want to continue to be a player in Ohio agriculture, you need to aim for and stay in that top third consistently over time. The top third farms aren't always the same farms every year. Some will move in and out because things happen. Weather in some parts of the state might make a very poor profit year for a farm that's typically in that top third, but they're positioned to withstand those down years and slide back into that top third in the next year when weather cooperates or markets cooperate. So you can be a top third farmer. So I grew up not far from here in Worthington, Ohio, which is not a hotbed for young ladies to go to the College of Ag at Ohio State University because they wanted to milk cows. And as I started studying to be a dairy herd manager, it just seemed to me that business was going to be a really important part of managing farms. And so I focused really on production courses as well as business management, farm business management courses, and found that I really love pushing numbers. So 35 years later, I am exactly where I want to be, and that is working with farm management, with farm business analysis, and I have the privilege of actually doing all the bookkeeping for our dairy farm that my husband and I have. And so that's given me the opportunity to see firsthand both sides of the checkbook, not just learning about it, but doing it and generating these kind of statements and using them to manage a farm that sometimes is profitable, and there are years when it's a challenge, but over time, is this farm business getting us where we want to be? And having the privilege of working with farm families for the last 35 years, looking at their farm business and seeing if it's getting them where they want to be, or if they have to make a hard decision and say, we need to be doing something else. That is just as important decision, and I respect the farms that can make the decision because they've looked at things carefully and said, we can't continue this way. We've spent too much time building equity in our farm business to pay for the privilege of farming until it's gone. So helping families move to that next stage, whether it's out of a particular enterprise or into one that will get them into that top 30% that makes it fun to be a farmer.